Hey everybody, morning. We've got channel members Andrew, Don, Ringo, Hugh, Terry, Serge, Jason, Swinborne, Rob, Dan, Ted, Mad, Frank, B, Marianne, Nancy, Will. Good to see everybody. And then we got channel subscribers like Ed, Ed, Nikki, Larry. Good to have everybody on the stream. Dun, dun, dun. Retail sales out today. FOMC tomorrow. You know, it's I don't know. And anybody checking on the futures charts? We have VIX OPEX happening, and we've got the futures contract rollovers happening. So, good morning, everybody. Welcome back to the show. I hope you had your coffee or maybe your Monster. Now, what if I told you that the talking heads on Wall Street, some of them are starting to cry about potential recession here with the jobs numbers all kind of bad, but the American consumer still on a shopping spree of epic proportions. What if I told you the Federal Reserve is about to potentially pour gasoline on that fire if they cut rates? Well, maybe they don't cut rates. Maybe. Now, think about this. December 2024, we were sure as sugar honey iced tea that we were going to cut rates, right? Think about, we love to forget, but think back. December 2024, we were sure we were going to cut rates. Quarter point. Locked in. Fed, they've all but confirmed it. No rate cut. What happened? 3% drop. Pretty much in one day. So, be careful out there. We've been rallying like crazy. What if? No rate cut. Check your six. Cover it. So, that's what we got cooking here. Now, for months, we've been on the drumbeat of doom and gloom. Consumers tapped out, credit card debt hitting highs. I've seen, the warning signs the cracks are forming, but, well, recession seems to get kicked down the road. I mean, it's, you got to be careful. Now, the Census Bureau dropped a little thing called the August Retail Sales Report today, and it turns out that the American consumer didn't just get the memo, just didn't get the memo about this impending apocalypse. Too busy shopping. Retail sales didn't just squeak by. They blew out of the water, jumping 0.6%, when the experts were only expecting a measly 0.2% increase. So that's like 3 times bigger, and that's kind of like expecting a gentle rain and getting a downpour. Maybe a fire hose. So, third month in a row, this kind of strength that we've seen in the retail sales. So much for that recession. So far, when this peters out, though, that's the thing to watch. So, what's happening here? What's going to happen? Well, we all seem to have collectively decided to ignore credit card bills. Maybe? Well, not exactly. Part of the story is about something we've talked about for a while, that tariff party, right? Those pesky taxes on imported goods are looming. Savvy shoppers are trying to get in front of that with the deals. Inventories for, that's why you see like Walmart warning that tariff costs are going to start ramping up because their inventories are dropping out. They bought a lot and imported a lot of stuff in front of the tariffs. They knew it was coming, but now those inventories are running out. So this is like a double-edged sword a little bit. While shoppers are snatching up the deals before the prices start going up. I mean, it's kind of like a nationwide beat the clock challenge where everybody's invited, whether it's clothing, electronics, whatever it might be that you need. And who loves that? Retailers, especially online retailers who have been seeing record sales numbers. Now, this is where it gets potentially interesting, though, because this isn't just a story about shopping. It's a story about opportunity. We're seeing a clear signal from the market. The consumer is still doing all right for now, spending their money, at least. Now, the kicker. This comes right in front of potentially the Fed cutting rates, right? There's a 96% chance cooked into the market that we're going to cut rates tomorrow. 96%. The economy's already showing incredible strength. And if we make money cheaper, well, it's kind of like giving a sprinter a jetpack. This is the kind of setup that could send things. We might get that blow off top, right? We could soar higher. And where's all this money going to go? Well, there's a staggering $7 trillion potentially sitting in money market funds. Tap a little bit of that. Because that money's earning next to nothing, right? As rates come down, you can bet a fair chunk of that cash might come flooding into the market, but maybe not. We'll see. So how do we play this? Where might there be opportunities? Well, let's kind of think about this, right? First, you got the obvious winner, retail, but not just any retail. Retail is a story of haves and have-nots. We're talking about the online giants, the e-commerce players that have been dominating the game. Think about companies that are making it easier and faster to buy crap online. That's where the smart money's going. I mean, we've got like Shopify, Amazon sitting near all-time highs. It hadn't really broken out. So we can take a look at some of that stuff later. But, Gap seems to be doing pretty good, turning a bottom. And you've got other ones out there. So Shopify seems to be a pretty good position there. Now, second, think about what happens when interest rates go down. Sectors that have been hammered by high interest rates back in the game, like real estate, utilities, even small cap stocks. We've talked about those. That's been a recurring theme here. These are areas that could see a surge in that $7 trillion of cash looking for a new home, at least one that does better than money markets. And finally, don't forget contrarian plays. The tariff situation creates some interesting dynamics and potentials that might start playing out. While some retailers might be getting squeezed from higher costs down the road, others potentially finding ways around this and ways to thrive. Look for companies that are being smart about their supply chain, one that are kind of diversifying, trying to get their stuff out of China. That's the place where the biggest tariff impact hits, is from stuff imported from China. And look, nobody has a crystal ball on this stuff, but the signs are here for now that a resilient customer exists, a friendly Fed, potentially making borrowing cheaper, but that, again, has a 24-month timeline to trickle through the economy. This is the time to be smart, strategic, and ready to seize opportunities as they present. So do your homework, find your targets, make sure you have a plan, and get ready for the wild ride. So that's it for the monologue, and let's figure out how we can potentially make some money in the markets today. What do you say? The list today, kind of dismal, actually. Almost surprising. Just no real gainers, no real losers, no real... I didn't even have any tickers out of almost 4,000 I check every day. None of them set up with an entry today. It's kind of wild. It's a benign day. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation here intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. Like, don't trade stocks, options, bonds, forex, futures, cryptos, treasuries, because you might lose money. I mean, you probably will if you don't have a plan and don't have a proven system, and you flip-flop systems. I mean, think about it. You take 3 losses in a row, you're like, oh, this is trash. It no longer works. And you move systems, and then you try that one out, and then it takes 3 losses. And does that sound like you? Don't bounce around, all right? And if you want somebody to just tell you what buttons to push, hire and consult a financial advisor. It's not me. I don't play one on YouTube. I don't pretend to do that. I don't do that, all right? I don't trade for people. There's no backdoor deals. There's no nothing like that. So you gotta watch out for number one. You gotta watch out for you. You gotta learn how to do this if you want to be successful. It's not easy. I've certainly spent a long time trying to get it right before I had a lot of success. So this is the big show this week. Big show. We're expecting to cut the rate, shave it down from 4.5 to 4.25 on the top. What if they don't do it? Are you ready for that? Dun, 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 dun. My man Jack doesn't think it'll happen. And like I said, back in December, pop over here and look. Back in December, it was a while ago. This was the FOMC right here. Right in here. Yikes. That move. Yikes. We went from here down to here. 4% move. Just a few days. It's like 3% in one day. Because we didn't cut. Be prepared. Scout motto. I set some hedges up yesterday. If you're not aware, go check out Discord. I have a trade close to the money debit spread, at the money debit spread, and then I have a hedge that's an out of the money debit spread with a 9. The trade, just looking for 50% gain. The hedge has a 9x potential. Risk 1, potentially make 9x. Not bad. That's a hedge. Trades are more like, closer to a 1-to-1 risk. For me, anyway. And the big potential payout if the crap hits the fan. Now, I just need to move down below 6,300, which not that crazy right now. 4% down gets you right down to 6,300. If we rally into FOMC tomorrow, odds are anytime we rally into an FOMC meeting, the reaction is sell the news. Just saying. Be prepared. Be prepared. Now, 5 p.m. today, 30 minutes of awesome. I'll do at least 30 minutes of requests. If you want to come hang out, that's the time I do that. This morning, I'll just dance through my normal list here, try to find some opportunities, what's popping, what's dropping, look for, what to watch out for today. Remember that pop here, that's that contract rollover right there. So it's not really a pop per se. Let me go back and look at ESM 2025. Yes. Is that the right? Shoot. It's you. Yeah. There's the September contract. So no big pop when we stay on September. Right there. And what we're doing is moving to, Z 2025. Moving to December, and no big pop here either. All right, there's just a difference between the two prices. That should have worked out. There's the market opening. As you can see here, S&P just slightly higher. So we'll have this gap, and this gap that shows up in the futures will probably get filled here. We don't usually leave a big gap, even on a contract rollover. Probably gonna fill that baby. Fill that baby, fill that baby. Russell, funny enough, not really a gap at all. In fact, it gapped down. Looks like slightly. Oil, ramp it up just a little bit back into the. We built a bottom. We've got resistance. So break out, probably come up to the daily roadmap line if we break down, and then test that downtrend of highs. Daily roadmap line in here, and I have it turned. Oh no, it's calculating. There it is, right there. Right there. Break through that resistance, and then test that downtrend. If we get through all that and through this high, tips the odds we're going higher. But this right here, watch out. This is a setup for dropping out. If we get this flush out, it'll probably be a sell everything type of event. This is a cautionary. We're actually touching that fib line on gold. Said we might actually get up there and touch it. There it is. Bitcoin, Looks like we're still working on that 4. Might get the 5 and then retrace. And this may be, yesterday I was talking about how this could be an intermediate 1, 2, 3, 4, 5 inside the 3. So it looks like we're still working on that part. So we'll see. This could churn in this area for a little while if this is what's playing out. You can see this basically stuck in the mud here for a couple weeks, which we've been stuck in the mud right here on Bitcoin for 3 months already. This could add another, like pushing in October. We can see that blow off in October, and then the party's done for crypto. Let's see what happens. Ethereum coming back down. I want to see it hold that box and go higher. If we get back into the box, odds might be that we're coming on down. Maybe coming to visit the daily roadmap line. Would not be my favorite thing to see right now on Ethereum. NKD. Japanese market's back open today. Not really doing anything. We hit these upside targets, and we might need a little flush back down before we can go higher again. Global liquidity indicator. Oh, looky. What's happening here? Ha. Well, there you go. Dollars in the zone. Now we're looking for this to either hold, turn and break back above this stuff. That would be bullish. Or we push down, gonna come on down here and potentially hit that line down here. This would be a resistance point, and this would be a resistance point wherever that, wherever it met that line down here. Let's see. Always do it backwards. For whatever reason, it's always in my mind backwards. So dollar yen not really moving at all. It's the euro right now pushing that dollar. Look at this. Breaking out, baby. Next upside, potentially right up there around $1.20. $1.20. That's 1.2 euros per USD is what that is. Yeah. You think of this. Euros per dollar. 1.2. Where that potentially comes up. Pound sterling dollar. And that one's not quite. Look at that beautiful 3-wave retrace. Oh my goodness. Thank you for throwing up alerts like crazy. It looks like the pound might pop on up here. $1.30, 1.38 pounds per dollar. It's quite a few pips. Quite a few pips right there. This would be a way to potentially play that if you wanted to. This was your fancy. Looking for that potential right there. XE. Got that and that. Look for that 109, 110, possibly a 111 on the euro. Wouldn't surprise me to see that right there. What's up, Apple Dumpling? What's crack-a-lackin'? still doing nothing. Just churning. Churn, and burn. Amazon not really breaking out. Let's look at Shopify really quickly. Yeah, I see Shopify been rocking. Potential pop on up new all-time highs here. Maybe put us up into this 230 zone to possibly 300 zone if we get this continuation on up here. Maybe ping pong it like that. Google, we're shooting for that 260 target. Meta, oh, Google yesterday, big news. Dun, 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 dun. Joined the $3 trillion club finally. $3 trillion club. So Apple joins all these guys. I mean, Google, excuse me. Google joins these guys. Apple, Microsoft, and Nvidia. Having met $3 trillion in market cap. Amazon is still hanging out down here, along with Meta. Lagging way behind, below the $2 trillion club. Broadcom. And Taiwan Semi. Hanging out above Tesla right now. And it looks like that should be flip-flopped. Briefly, Oracle CEO became the richest person in the world. Then Tesla went on a run. Larry Ellison, currently the front runner to get the stake in TikTok. So we'll see. Whoever gains control of TikTok is probably going to rip. We'll see who does that. And right now, that could easily double or triple or even quadruple. If it quadrupled, it put it in the $3 trillion club. Think about that. Think about this for a minute. Quadruple, $314. That's a share. You can see Oracle at 1,200. That's spicy. That's spicy. So, potential there. We'll see. It'd be crazy. Absolute crazy. Nobody's even talking about it, but it'd be crazy if TikTok got given a Tesla. Oh, man. Absolute crazy. Anyway, moving on. Meta. Well, so far we held the, we retested the breakout here. Retested. Looks like we're going higher. 840 be the upside there. Microsoft. Hey, General. Good to see you, sir. And Microsoft back tested the, this level here. Kind of the breakout, but if we get more softness, we just, this is the caution here. We may see this pop back up to a 618. Since we have this set up in place, if we see any kind of pop, we might hold that 530 resistance and then take another shot down here to the breakout level. So my caution on Microsoft at the moment is that would put us where this moved down and that moved down, hit the same kind of level here. And you gotta learn to do this stuff for yourself, because Publisher Clearinghouse filed for bankruptcy, no longer gonna pay out lifetime anything. So end of an era there. No longer can you count on winning Publisher Clearinghouse and making it for life. Nvidia looks like potential to go higher, but that's lower highs. Be careful. Trip back to the breakout wouldn't surprise me. So far, very similar to Microsoft. We held this. We did break up through, kind of we're above that 618 retrace here. Now Microsoft's trip was all the way up almost to the 618, but this one hanging out just slightly above, but still holding in here where we can see a second trip down here very easily. This is the kind of scary thing coming into FOMC, lofty expectations, and all these setups for a potential another move down. Tesla, beautiful. Somebody was asking me about the big retrace on Tesla. I don't necessarily see a big retrace. I mean, yeah, after you pop for 3 days, maybe it's a little bit over the skis and needs to take a resty for a few minutes. So I've been working on a new kind of indicator right here. Give it a second to load. And see, we're up here near a 3 standard deviation move. You know, Tesla can and does hit that 3 standard deviation, but when we do that, we tend to take a rest for a couple months. So as long as we stay kind of in this zone, take a little rest, and just we can keep this uptrend going. If we get a little any more excitement from here, you can see right back here. We get too more excited from where we are right now, we're due for consolidation. You can see this right here. We ripped, got above that 3 standard deviations, and then chilled the fudge out for a little while. So let's keep it under control here. It's sustainable as long as we don't get too much more crazy. We get above like 450 right now in the next day or two, probably due for a month or two of pullback. So we're sideways. So we chill this out just a little bit and keep a reasonable climb rate. We can keep this intact. So we did spend a lot of time consolidating here. And like I talked about, we're getting close to that. We're not quite there, but we're close to that 450 level. This was the mouth of the watermelon seed squeeze. Projected right up here. Tends to be the kind of move that happens after we break out. Right there. Then what happens after that? I don't have much to tell you at the moment. It's an unreliable pattern. You know, we get that move, and then what happens? Now, we don't have to get that big a move. Like, it doesn't have to go there. It can sit here for a while, and after expending all that energy to get up here, we just park it here. But interestingly enough, if you look at the 12-month chart, guess what? We're green again, baby. Green for the year. Netflix, taking a little chill here. Probably going to, so we got that move up. Bounced off that 618. Chilling out a little bit, maybe get a little 618 retrace, and then get the next move down and finish this baby up. So that's still the potential path. Time frame, I don't know, sometime by the end of the year, maybe. See what happens. All right, so diving into the bigger list, looking for what's moving up, what's moving down. And I go pull everything moving $2 or more up in the pre-market, put it on the gainers list. Everything moving $2 or more down, put it on the decliners list. And we hunt for some opportunities, which today just looks kind of meh. Ferguson, that's wholesale distributor stuff. Just kind of grinding here, right? We back tested the breakouts, back kind of back to the roadmap line, potential to push on out to 252. Let's see what we got cooking. Yeah, still resistance right there at 252. ASML, that's still on the path for 1,000. Spotify, Not looking so strong. Not looking so strong. I would be a little bit cautious here. We might take this on a trip down deeper. Now, if we could break out above 740, it's potential to go higher, but this has already gave up its pre-market gains. Potential for this to come on down. Oracle, like I said, front runner for TikTok. Maybe grab a few shares. Maybe, you know, Trump gonna announce that deal anytime now. So you can see down here, Oracle jumps as Trump, blah blah blah. A certain company, maybe, you know, whichever it is, it's probably gonna rip. So Oracle could be the one that's tapped. We'll see. Like I said, it'd be funny if it was like Tesla or XAI or something like that. FGI. Nasty chart. That's just chop off the bottom and nothing that can, it's very, very reliable. Like I said, over here, we got Hershey's talking about how they're going to up wholesale prices on everybody. That's been a consolidation zone. Dip below it. Look at this. First wave down, retrace. Second wave down, didn't quite get there. Close enough, really. So is this consolidation done? We came back into the COVID crap. Here's the high, here's the low. If we're going to take this higher, going to have to break through that 618. You know, funny, until this low was here, this 618 was not here. But that's where we've had resistance once, twice, 3, 4 times. If we can pop through, sets up new highs at 305. Korea is still ripping. Look at this, breaking out of the consolidation. About to push into new highs for the last 3 years. TSM, zoomer up. A little bit played out for the moments. I would be very cautious here. Oh my goodness. Almost sneezed. 274 next upside, but needs a retrace. We're getting a little over the skis here on TSM. But maybe. I mean, look, came up, back tested the breakouts, ran up to the 1272. Might see this go just a little bit higher, get another retrace, retest that consolidation, and then go for that. So bigger picture, that might be what we got. 313. PFGC, nothing. Performance Food Group. Bloom Energy, ripping, still ripping. 121 next upside. WBTN, Webtoon, interesting. Nothing. I got nothing on that chart. No roadmap line. Well, it's cooking. It's cooking. It's cooking. It's cooking. But there's not really anything to do here. Like this sloppy price action that doesn't help me make any decisions. This is the lowest low. Would it be working on something bigger? Yeah, but I need it to retrace back in here and set that up before I'm really interested. SYNA. And if you want to jump on some Oracle stuff, there's a 2Xer. Just buy a few shares of this, get 2X leverage, and you just sit on it. Could be a smart decision, especially if that 4X'd on the underlying, getting the $3 trillion club. This right here would do an 8X. 8X times 50 is 400 bucks. Woo. That'd be pretty spicy. SYNA. At the target. Crazy. Turb. And nothing here to talk about. MP. So I was on a, I don't remember if it's profit. I think it was profit panel. They were talking about how MP was just going to keep ripping with all the investment. I was like, well, it just hit the resistance at 76. So guess what? Price action wins yet again. We retraced, retesting the breakout. Now potentially we could come on up to the next level, 96. See what happens there. AMKR. Well, there's a head and shoulders perfectly played out right there. Head to the neckline. Right down there. Potential to bottomed. Need a retrace before, I'm a trend. So this is a trend off the lows. I need a pullback to get continuation. So roadblocks. Be careful here. That looks like we're either going to break out or reject that all-time high. If we break out 184, if we reject the all-time high, this can take it down to a lower low. Be careful. Now, IPO-wise, there's where we IPO'd. That's the bottom we made. That could potentially be the bottom that stands. But this price action here, not bullish. Not even, it's just not bullish price action. This looks like an A wave down. This looks like some sort of B wave. Maybe that was an A, and this is a B, and this is a C. Got a little excited, and now we get the fact that this was an A, this was a B, and we get the C that takes us back down here. So be careful. We may see that play out. These guys, when you look at their numbers, 22 years of all their sales to cover the current share price, and they make no earnings. So infinity on the earnings. They just basically blow money. Even though they're giant. Look at the debt numbers here. Oh, they're growing revenue to fix the debt. Debt just keeps rocking. Debt's actually climbing on an annual basis. They used to have big cash equivalents. Now their cash equivalents is tiny. Ralph Lauren. Got this pullback. Sitting at resistance. 331 potential upside. Rocket Lab getting whacked. Went for a big run to the 1618. Came up here, retraced, held that 127, 1448, just below the 1272. It's 90% basically, all the way to the 1272. Held that, came up the tag. Still looking for this to retrace back down in the roadmap line area. I did make a bunch of money on this a couple months ago in the 50K challenge here. That was this big jump right here. Rocket Lab. Dun, 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 dun. You can look at the symbols. You can see Rocket Lab profit coming in right there. Nice. There you go. Wherever made the most money, Rocket Lab. Next up, DJT. Number of trades, DJT, Docu, then Rocket Lab, then Celsius, Delta Airlines, Chewy, Merck, IBIT, SPXS was from years ago. IBIT, DLTR, Doge was from years ago. United Airlines, Google, Gap, Tesla. There you go. How do you make money in the market? Follow me for more. Make sure you subscribe. All right, that's kind of, let's see, Delta Dog, Data Dog, Delta Dog coming back. Just can't break this funk here. Snow. I got my one share. I haven't been willing to put more on it yet. This is not what I've. Seems like this is going to do a bigger retrace back down to a retest this breakout here. When you look at it, downtrend of highs coming across years. We broke out. Looks like we're kind of playing that out right now. Kind of scratched the bottom of my target. May see this come back down. Retest that downtrend of highs. That would be the point to potentially add if we can hold that. Add exposure for the longer term up. Right there. Dave and Buster's. Ooh, nasty, 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 nasty. Looks like it's going to go back to the bottom. All right, everybody. That's don't got a lot to say. I'll be back 5 p.m., 30 minutes of awesome. I'll be on Profit Panel at 2:30. That's prosperitypub.com/profit panel. And yeah, be careful out there. Tomorrow's FOMC. It's not, while it seems like it's a sure bet, I would be cautious here. Maybe it's not a sure bet. Maybe no change is the play. You know, I'm cautious about this. Like, even if we get a rate cut, is that just going to be disappointing for the market? I know a lot of people are like, oh, the market's sure. Like, the market knows. Maybe the market doesn't know. Maybe Powell doesn't want to play into Trump's palm. You know, maybe he doesn't want to be the puppet for the puppet master. Right? Think about it. Jobs were weak, but inflation's still kind of a little bit high. If they dump rates, it just exasperates inflation. Just exasperates inflation. Be careful out there, everybody. Count your save, maybe your own. I'll be in Discord, and I'll be back. 30 minutes of awesome, 5 p.m. See you later.